Okay. Una hindi ko lang una gitu. Okay, will you refer to your book, problem number 4? We will take up for the remaining time. We have problems 4, 5, and 6. At least today we cover chapter 5 of Dayag. Tomorrow, we will still continue with chapter 5. Tomorrow is Thursday. We will continue with chapter 5. On Friday, we may start with chapter 6. That's already module number 8. Chapter 6. But on Friday again, I'll give you a quiz 1 to 20 based only on chapter 5. Chapter 5 is module number 7. That will be the coverage of your quiz on Friday. Okay, everybody, open to problem number 4. Problem number 4 is on page 536. Page 536. Siya. Page 536. Why mo lang to sa iya kuminkuha mo? Iwan niya siya di. Okay. Ito nga ko na. Jo, Jo. Okay. Now we go to problem number 4. So we can at least have the entries. Problem 4. Transfer of depreciable asset at beginning of year. By the way, page 536. FF Corporation purchased 60% of MM Corporation voting stock on January 1, 20x4. On January 1, 20x8, FF received 245,000 from MM for a truck. FF had purchased on January 1, 20x5 for 300,000. The truck expected to have a 10-year useful life and no salvage value. Both companies depreciate trucks on a straight line basis. So again, we have two parties here. FF Corporation being the parent and MM Corporation the subsidiary. FF Corporation initially invested on MM on January 1, 20x4. And that was on January 1, 20x8 when FF received 245,000 from MM for a truck FF had purchased on January 1, 20x5 for 300,000. In other words, on January 1, 20x8, FF sold the truck to MM and received 245,000. The truck's expected to have a 10-year useful life and no salvage value. Both companies depreciate trucks on a straight line basis. Now, what will be our entries on December 31, 20x8? We are going to involve an elimination entry. So maybe you can call this adjustment and elimination entry. The first entry is to debit track, debit track, debit gain on sale of truck, credit depreciation expense, credit depreciation expense, and credit accumulated depreciation, and credit accumulated depreciation. Now, what are the amounts? Debit to truck for 55,000. Debit truck 55,000. Debit gain on sale of truck 35,000. Debit gain on sale of truck 35,000. Credit depreciation expense 5,000, and credit accumulated depreciation 85,000. So credit depreciation expense 5,000, credit accumulated depreciation 85,000. Now we have to compute for the gain on the sale of the truck. The price paid is equal to 245,000. The price paid is 245,000. That's the price paid by M. The cost of the truck is, initially you have to indent 300,000. Indent 300,000. From 300,000, deduct accumulated depreciation. Deduct accumulated depreciation. 300,000 divided by 10 years. 300,000 divided by 10 years times 3 years. Times 3 years. Why do we have 3 years? Because from January 1, 2000 X5 to January 1, 2000 X8. So actually, the truck was used by FF for already 3 years. So that's why you have 300,000 divided by 10 years, multiplied by 3 years. So your accumulated depreciation for 3 years is already 90,000. Is already 90,000. From 300,000, we deduct 90,000. The difference is 210,000. The difference is 210,000. That is the carrying amount of the truck as of January 1, 20X8, being the date of the sale. So 210,000, the book value, the selling price is 245,000. The gain on the sale of the truck was 35,000. So we are debiting gain on sale of truck for 35,000. Okay? Now we go to the accumulated depreciation adjustment. The accumulated depreciation adjustment. As stated in the problem, the truck is expected to have a 10-year useful life. That's from the beginning, and no salvage value. And both companies depreciate trucks on a straight line basis. And that FF Corporation purchased only on January 1, 20X4. And the truck was sold on January 1, 20X5. That is after 3 years, no? The truck was bought, by FF on January 1, 20X5. and it has an expected life of 10 years. So what will be our entry? Okay, since we already had our entry, debit to truck, debit to gain on sale of truck, credit to depreciation expense, and credit to accumulated depreciation. And we have computed for the gain on the sale of the truck. So actually, if you try to trace the entry upon the sale of the truck, the entry was supposed to be debit cash, 245,000, debit accumulated depreciation for a total of 90,000. So what do you get? Adding the debits, debit for cash, 245, debit accumulated depreciation for 90, and then we credit track at its original cost of 300. So that's why the difference is the gain on the sale of the truck. That's 35,000. I am trying to trace the entry when the truck was sold, because the entry that we are preparing are already your elimination entries. So, what is the entry upon the sale of the truck? The entry was to debit cash, 245,000, debit accumulated depreciation for 90,000, credit track 300,000, and credit gain amounting to 35,000, and credit gain amounting to 35,000. That was the original entry when the truck was sold. But the requirement to us in the problem is not to prepare this entry, but it is only for the work paper elimination entry or entries needed at December 31, 20X8 to remove the effect of the intercompany sale on December 31, 20X8. However, the truck was sold on January 1, 20X8. Okay? We are required for the entries on December 31, 20X8. Okay. So, what will be your entry, initial entry? Debit to truck, debit to gain on sale of truck, elimination. And then, we debit to truck, debit gain on sale of truck, credit depreciation expense, and credit accumulated depreciation. Okay, how did we arrive at these amounts? The amount of the truck is equal to 55,000. Why do we have only 55,000? The selling price is 300, the cost was 300,000. And it was sold only for 245,000. In other words, in the books of the parent, the truck account is already closed. Kaya naghimo na taga ni entry nga nag-debit kita cash 245, nag-debit accumulated depreciation nga 90, nag-credit truck 300, nag-credit gain nga 35. However, as we record now the truck in the books of the subsidiary, at the same time preparing the elimination entries, we debit to truck 55,000, we debit gain on sale of truck 35,000 to close gain on sale because we have gain on sale amounting to 35,000 being a credit. On the other hand, we have to credit depreciation expense in the amount of 85,000, 5,000, and credit accumulated depreciation in the books of the subsidiary for 85,000. Now, why do we have 85,000? The depreciation in the books of the parent supposed to be is 300,000 divided by 10. So 300,000 amo na ang iya nga original nga cost. Ang 10 years iya nga original nga life. So how much per year? How much per year? And we have in the books of the parent, the reported amount of cost is only 245,000. Divide mo na lang sa 7 years. Ang iyang remaining life. Kay 10 minus 3, 7 years. Times 1 year lang. Sa books ni parent, ang iyang original cost, 300,000, i-divide mo sa 10 years, kag i-multiply mo sa 4 years supposed to be. Okay? So repeat. Accumulated depreciation adjustment is computed at 85,000. That is the credit that we made. How did we arrive at 85,000? Okay, the accumulated depreciation adjustment is computed as follows. The required accumulated depreciation should have been 120,000. 120,000 is taken by dividing 300,000 by 10. So it's for 30,000. And you multiply it by 4 years. That's up to December 31, 20x8. Kay man ang atong elimination entry is on December 31, 20x8. Okay? Required 300,000 divided by 10 times 4 is 120,000. Reported as in the books of the subsidiary 245,000 divided by 7 years times 1. That's at the end of 20x8. Why do we have 7 years? The original life is 10. We deduct 3. So the remainder on January 1, 20x8 is only 7 years. So 245,000 divided by 7 years times 1 year. That's for 20x8. So it's 35,000. It's 35,000. Okay? So the required increase in the books of the subsidiary is 85,000. That's our credit to accumulated depreciation. I hope you're following. The elimination entry number 1 is debit truck, 55,000. Debit gain on sale of truck, 35,000. Credit depreciation expense, 5,000. And credit accumulated depreciation by 85,000. And we compute for 85,000 as the difference between 120,000 and 35,000. So 85,000 is the required accumulated depreciation. Okay. Now, what is the credit to? Depreciation expense is the amount of 5,000. 5,000. That's the balancing figure between 90,000 and 85,000. 90,000, the total of the debit side and the credit side accumulated depreciation of 85,000. So we credit back depreciation expense by 5,000, or that's the difference between 90,000 and 85,000. The credit of 5,000. So this is your elimination entry on December 31, 20X8. Take note, the acquisition by the subsidiary was made on January 1, 20X8. We are required for the elimination entry on December 31, 20X8. Okay, I'll give you the second elimination entry. Give the work paper elimination entry or entries needed on December 31, 20X9 to remove the effects of the intercompany sales. To remove the effects of the intercompany sales. So in elimination entry, in requirement number 2, the entry is to debit track 55,000, debit track 55,000, debit retained earnings 30,000, debit retained earnings 30,000, credit depreciation expense for 5,000, and credit accumulated depreciation for 80,000. Repeat, debit track 55,000, debit retained earnings 30,000, credit depreciation expense 5,000, and credit accumulated depreciation by 80,000. Now, the accumulated depreciation adjustment of 80,000 was taken as follows. Required is 300,000 divided by 10. 300,000 divided by 10 times 5 years. That's up to the end of 20X9. Required is 300,000 divided by 10 times 5 years equals 150,000. That should have been the accumulated depreciation. 300,000 divided by 10 times 5 years, 150,000. Reported by the subsidiary is 245,000 divided by 7 years times 2 years. 245,000 divided by 7 years times 2 years is 70,000. Is 70,000. So you'll finally have your required increase in the amount of 80,000. In the amount of 80,000. That is our credit to accumulated depreciation. Next, a similar problem to 4 is number 5. I'll just give you the entries, study them well, because I will still continue with problem number 6, involving downstream and upstream. Okay, requirement number 1, elimination entry on December 31, 20X8. Requirement number 1, debit track, class elimination entry ini ha, debit track 90,000. Debit gain on sale of truck, 30,000. Credit accumulated depreciation, 120,000. Debit truck, 90,000. Debit gain on sale of truck, 30,000. Credit accumulated depreciation by 120,000. How do we determine the gain on sale of the truck? The price paid by the subsidiary, 210,000. 210,000, that's the price paid. We deduct the cost of the truck, indent. The cost of the truck, indent, 300,000. Cost of truck, 300,000. Deduct accumulated depreciation, 300,000 divided by 10 times 4 years. 300,000 divided by 10 times 4 years equals 120,000. So the difference is 180,000. 210,000 minus 180,000, that's the gain on the sale of the truck, 30,000. So requirement number 1, elimination entry on December 31, 20x8. Requirement number 2 is the elimination entry on December 31, 20x9. The elimination entry on December 31, 20x9. Debit track, 90,000. Debit track, 90,000. Debit retained earnings, 30,000. Debit retained earnings, 30,000. Credit depreciation expense, 5,000. Credit depreciation expense, 5,000. And credit accumulated depreciation, 115,000. How did we get the required credit to accumulated depreciation of 115,000? Required accumulated depreciation adjustment of 115,000 is computed as follows. Required 300,000 divided by 10. 300,000 divided by 10 times 5 years. 300,000 divided by 10 times 5 years equals 150,000. 300,000 divided by 10 years times 5 years equals 150,000. 150. Required ina. Recorded is 210,000. 210,000 divided by 6 years. 210,000 divided by 6 years times 1 year equals 35,000. 210,000 divided by 6 years times 1 year equals 35,000. So the difference is the required increase of 115,000. So that's how we got the credit of 115,000. Now let's go to one more problem. That's problem number 6 that will illustrate to us downstream and upstream sale of land. So everybody, you refer to problem number 6 on page 537. BB Corporation owns 75% of SS voting stock. BB reported income from its separate operations of 90 and 110 in 20x4 and 20x5 respectively. SS reported net income of 60,000 and 40,000 in X4 and X5 respectively. Requirement number 1, compute consolidated net income and the income assigned to the controlling interest to X4 and X5 if VB sold land with a book value of 95,000 to SS for 120,000 on June 30, 20x4. So it's downstream because BB sold land to SS. So parent to subsidiary. And requirement number 2, compute consolidated net income and the amount of income assigned to the controlling interest in the consolidated statements for X4 and X5 if SS sold land with a book value of 95,000 to BB for 120,000 on the same date of sale in number 1. So that in number 1 requirement, we involve downstream. In requirement number 2, we involve upstream. Okay? So this will be our last problem and we may have a renewal, siguro mga 10 minutes lang or 5 minutes. Okay. So in problem number 6, 1, downstream sale of land. You create 2 columns, 20x4, 20x5. Okay. First, BB separate operating income. BB separate operating income. X4, 90,000. X5, 110,000. So 90 and 110. Separate operating income of VB. We deduct unrealized gain on sale of land. Unrealized gain on sale of land for 25,000. Unrealized gain on sale of land. We deduct that from 90,000, meaning 20x4. Deduct from 90,000. So the difference is 65,000. That's the operating income of BB. 65,000, ang X5, 110,000. Then we are going to add S realized net income. realized net income. 20x4, 60,000. 20x5, 40,000. 65 and 60, we get 125,000 and 150,000. Consolidated net income. 20x4, 125,000. 20x5, 150,000. Next, income to non-controlling interest. Income to non-controlling interest. 60,000 times 25%. In 20x4, 15,000. So 60,000 times 25%. 20x4, 15,000. In 20x5, 40,000 times 25%. So 20x4 column, 125,000 minus 15,000. 20x5 column, 150,000 minus 10,000. So the income to controlling interest, 20x4 is 110,000. 20x5 is 140,000. So 20x4, 125,000 minus 15,000 is 110,000. 20x5, 150,000 minus 10,000 equals 140,000. Now we go to requirement number 2. which is the reverse of requirement number 1. That in requirement number 2, we have the upstream sale of land. Again, we create 2 columns, X4 and X5. Okay, BB's separate operating income. BB's separate operating income. 20x4, 90,000. X5, 110,000. Okay, 90 and 110. Next, we go to SS net income. SS net income. Under the 20x4, SS net income, 60,000. 60,000. Then deduct from 60,000, deduct